Hello and welcome back to Cryptollennium. After quite the hiatus, we figured we would make a return to make a couple of things clear for those still participating in the market. Last week, we recently saw a dramatic plunge from the 60,000s down to $49,000 for Bitcoin. And the broader risk asset markets took a huge plunge as well. Today, we'll talk about what the potential reason for that was and what we can look forward to as we move ahead. And hopefully, you are still a participant. A few things we want to cover: what's going on with the Fed, what's going on with crypto, what's going on with broader markets and global liquidity, and a couple of other miscellaneous things. So without further ado, please like and subscribe and let's dig in. Before we go further, I just want you to look at things from a broad perspective. Bitcoin dominance and where it's at. Currently, we're at 57%, 57.5%, give or take. And we're climbing up step by step. Why this is important is that when Bitcoin dominance reaches a peak, that's when we can see a real rally for the broader crypto market. If you take a look at the RSI, or Relative Strength Index, you can see that this is a point that Bitcoin dominance has never reached. Although the percentage is not as high as the previous, the market is vastly different. There are thousands more cryptocurrency projects. And with that said, the relativity of Bitcoin dominance being this high is crazy. A lot of people theorize that we'll top out in the 60 to 65% area, but why does this matter? Well, the reason is, if you take a look over here, March 2020 is when Bitcoin took an enormous dip along with the stock market, right as COVID hit, and everybody thought we were going to a crazy recession. This was short-lived, and Bitcoin dominance started to decline, okay? One could say this is the beginning of the bull run that we saw during the COVID times. Once we reached a semi-all-time low for Bitcoin dominance, that's when we saw altcoins top out, that's when we saw Bitcoin top out, and that's when we saw the crypto market cap reach a peak. Once again, this is happening. We're climbing slowly to a peak of Bitcoin dominance so that when we start dropping, the markets can start pumping more evenly. And liquidity from Bitcoin can be spread out. Something that might be important to keep in mind: the relevance of rate cuts is huge. One thing I want to point out to those who might not be aware is when the Fed raises rates at such a fast pace, eventually they're going to have to cut. And when that cut is, nobody really knows, but typically either they break something or inflation or their goals are achieved. And these goals are certain metrics that they look for. For example, core CPI, unemployment, and other things. But these two being some of the biggest factors. If you haven't followed the Fed, they've stated their goals in the past. They wanted unemployment to be around 4%, while core inflation, or CPI, was around 2-ish%. Okay? Last week, about a week and a half ago, before we saw the tumble, job numbers came out, and unemployment had shot up in July to 4-point-something%. This was taken as bad news, but in fact, this is great news, and this is exactly what we want, to see a rate cut so that things can go back to bullish. It's been mentioned that the first rate cut is likely going to be in September, and this brings me to another point. Typically, after such a large increase, and we approach a rate cut, you'll see an insane correction about a month or so before that rate cut is actually taken place. This is a time where people get shaken out and fears of a recession. And yes, we could go into a recession, so none of what I state is financial advice, but this was all textbook for what we can expect. Fed policymakers signal rate cuts ahead, but not recession. On August 5th, U.S. central bank policymakers pushed back on Monday against the notion that weaker than expected July jobs data means the economy is in a recessionary freefall, but also warned that the Federal Reserve will need to cut rates to avoid such an outcome. Many of the latest jobs reports have a little more room for confidence that we're slowing but not falling off a cliff. It's extremely important that we not let the job market slow so much that it tips itself into a downward. So this is why the Fed is buying U.S. Treasuries once again. This is meant to pump the markets back up, okay? This is meant to provide liquidity back to the market that we so badly need. So let's move on to total crypto market cap and trend line. This shows you where we are right now. This should be a breath of fresh air. The entire history of the crypto market cap. We are still arguably in the bear market, okay? We barely touched fair value recently, back in March, but relative to the last bull run, let's take a zoom in right here. We're still hanging out. We should all still be excited for the accumulation phase that we're currently in, okay? Because if you look at January 2025, which is not where we even care about, we have a fair value of about 3.4 trillion. Currently, we are touching about 2 trillion, okay? If we go to July 2025, fair value shoots up to 4.2 trillion. Imagine if we just, go halfway or a quarter up to or towards the upper band, you're looking at close to 10 trillion. So I would say closer to between 5 and 8 trillion for the entire market cap of crypto. That's huge. Okay. That's more than double this last cycle. Another thing to note right here, Bitcoin logarithmic regression bands, bubble and non-bubble fit. What does this look like to you? More optimism. Let's zoom in. As you can see, we are still in accumulation territory. Yes, it's not these prices right here that we saw in September of 2023, but it's still delicious. Okay. And for perspective, look at January 2025 and what the non-bubble upper says about the price of Bitcoin. According to math, okay, we're looking at about $108,000 Bitcoin. Okay. If you move that over to about February 2025, the non-bubble upper is about 115,000. Now, if we touch the lower bubble, the lower band of the bubble, like we did last cycle, if we just barely touch it, that's $238,000 for a Bitcoin. I don't think it'll get that high, but don't take my advice for it. It might. But that means we have anywhere between $110,000 and a $200,000 Bitcoin confidently for this next cycle, whenever it might be. If we go into a recession, so be it. Keep accumulating, not financial advice. But keep that in mind. We're going to fly through the rest of these just to give you a little bit of an idea of where we really are and what is going on in the broader markets. Stock market, this last week, we saw the dump. But this title says, institutional investors bought the dip, retail traders sold aggressively. What the summary is here is retail traders sold about $1 billion worth of their stocks or risk assets. Retail order imbalance ended the day at negative 1 billion. Okay. Check this out. Institutional investors, on the other hand, bought the dip with $14 billion in net buying. This is buying the dip at a different level. Meanwhile, regular people on the street are freaking out about their retirement, others are freaking out about their crypto bags. Whales keep on whaling. Another note, Bitcoin long-term holders only sold about $600,000 worth of Bitcoin when it tumbled to 49,000. That is about 12 Bitcoin. Okay. If you think of long-term holders, I think they have likely cumulatively more than 12 Bitcoin as a group. This should show you the confidence that whales have right now. The OGs. Recent market turbulence saw Bitcoin's price take a nosedive below 50K, but instead of panic selling, long-term holders barely flinched. Data reveals that these steadfast participants have only cashed out about $600,000. They know what's coming. Another big deal. Starting Wednesday, I believe this was August 7th, Morgan Stanley advisors will be allowed to offer shares of BlackRock's iShares Bitcoin Trust and Fidelity's Wise Origin Bitcoin Fund to their clients. If you watch Cathie Wood, she mentioned that it would be months until these wirehouses came online. Wirehouses are the places where the real money comes from. Nothing has started yet. So, take your time. Interesting note, Donald Trump Jr. unveils a plan for official crypto platform, cautions against frauds. So, long story short, Donald Trump Jr., son of former U.S. president, has revealed plans to develop a DeFi exchange platform or a decentralized finance platform. The move is described as a frontal challenge against traditional banking systems in the quest for a more equal financial service. And this was revealed during a Q&A on the subscription-based platform Locals on August 8th. I don't know very much about this, but if you want to do more research, this might be a big deal, especially if his father wins the presidential election. Another surprising development. Brazil approves Solana's first spot ETF. This development is expected to be implemented within 3 months, so not quite yet, it's just approved. It is also speculated that economic giants like the USA and the UK might follow suit by approving Sol spot ETFs, paving the way for its trade. Furthermore, it is considered one of the top blockchains for development. Thanks for tuning in. We're happy to be back. Please like and subscribe, and we will see you on the next one.